I mean, crypto had a huge deleveraging event on October 10th, and part of that was, and it's not reflected in the price, it does take time. So to me, because like what I'd call the fundamental activity on Ethereum is really picking up, it argues for a pretty big move into end of the year as well.
In a year full of unpredictability, Wall Street's top bull, Tom Lee, is forecasting a major turnaround for crypto. Despite concerns over a government shutdown, tariff disputes, and months of skepticism, the S&P 500 has already surged over 15%, and Lee believes the rally is far from over. He projects that by year's end, the market could climb another 10%, fueled by fresh Federal Reserve rate cuts and renewed investor confidence. What really stands out in Lee's latest interview is his crypto outlook. After the largest deleveraging event in 5 years shook Bitcoin and Ethereum earlier this month, he says the worst is behind us. Lee compares Ethereum today to Bitcoin in 2017, when it rocketed from $1,000 into the financial spotlight as Wall Street began paying serious attention. Now, Ethereum is attracting institutions, hedge funds, asset managers, and major investors who see its potential extending far beyond speculation. Record low open interest and improving technicals suggest to Lee that a powerful rebound is near. Lee highlights that Bitcoin has proven itself as a legitimate store of value, barely flinching even after billions in liquidations, while Ethereum's on-chain activity is accelerating beneath the surface. Capital could rotate back into risk assets like equities and crypto, with adoption spreading across DeFi, stablecoins, and other blockchain sectors. Even the regulatory environment, often seen as a hurdle, may be tilting in Ethereum's favor. This positions Ethereum as more than a digital currency, a backbone for future financial infrastructure. While many investors remain cautious, Lee sees a window of opportunity for both Bitcoin and Ethereum to rally sharply into year-end. Now, let's dive into Tom Lee's latest interview for his market predictions in the days and weeks ahead.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
The first place to start is why I think the investment outlook is better now than it was at the start of the year. So the S&P's up 10% year to date. You can see that huge dip that started in February, was a waterfall decline in April. I think a lot of people panicked and unfortunately sold at the bottom, but we had advised folks that when you see waterfall declines, as long as you don't have a recession, markets will stage a reciprocal recovery, which is in fact what happened. So think of that decline, which in a way was a bear market because it reset positioning, and now we're in a new bull market, but that was actually a very predictable recovery. And so if you ask me where I think we are by the end of the year, I do think it's a strong fourth quarter. So I think the S&P gets us to 68, 6,900, possibly higher. Mark Newton does think, again, similarly, that we're going to have a big fourth quarter. And there's a couple reasons for that. One, corporate profits are strong. Household balance sheets are still strong. We've got a lot of AI visibility. Something to think about, many people don't, is the financial sector is about to have some pretty big productivity gains coming the next 3 to 5 years. And I'm going to cover that in this presentation. And the Fed is going to cut rates. And then that gets me to the second driver of the US, which is blockchain. Wall Street is finally embracing blockchain, and not because they're becoming believers in crypto, but they believe that this is a way to improve the cost and productivity of their business. Okay, now this is going to take a little time to explain because I don't think people are talking about this, but let me explain to you why. If our view is correct on blockchain, Wall Street stocks like Goldman Sachs and JP Morgan are going to become a lot more profitable. Their margins are going to go up. They're going to become a lot less cyclical, and their PEs will probably look more like tech stocks. So I have to go all the way back to 1971, because in 1971, the dollar became synthetic. Now, you may not know what I'm talking about, but in 1971, the dollar was no longer convertible into gold, which means the dollar became a synthetic instrument because you could only exchange it for $1. Now think about what that means. In 1971, a lot of folks got scared and they said, well, I want to buy gold instead. And actually that was a great investment. But if everyone bought gold, the US economy would have collapsed, right? Because the dollar represented nothing but itself. So you had to create a system where people would believe the dollar was useful, and that was what Wall Street did. They created all these financial products because the dollar became synthetic. It's not just the dollar that's becoming synthetic. Everything is going to become synthetic. Let me explain that. The first is the Genius Act, which is what Congress passed earlier this year, which creates the stage for a stablecoin boom. And then the SEC announced Project Crypto, which is encouraging Wall Street to move on to the blockchain. Remember, the blockchain is a public software, basically gigantic public software, but what it does is it verifies transactions and it stores records and information, and it eliminates a lot of the costs and friction that Wall Street experiences today. In fact, Treasury Secretary Bessent believes that just the stablecoin market could be $3.7 trillion compared to $250 billion today. That's exponential growth as we start to see Wall Street move things synthetically onto the blockchain. So what does that mean? Well, if everything's becoming digital, okay, you've heard a lot of people say, well, you want to find the digital store of value, the digital gold, which is Bitcoin. And that makes a lot of sense. That's what Fundstrat has been advocating for since 2017.
Ethereum isn't just holding steady, it's starting to surge ahead. As 2025 comes to a close, Ethereum has outperformed most major crypto assets, fueled by record on-chain activity, rising developer adoption, and growing institutional demand. While Bitcoin continues to anchor the market, Ethereum's momentum signals that it could become a key leader in this next phase, setting the stage for what analysts are calling its strongest run yet. With unwavering enthusiasm for the crypto space, Tom Lee confidently predicts explosive growth on the horizon. As BlackRock and other crypto giants enter the market, he reassures that a long-anticipated surge is coming. By the end of 2025, there could be 1.1 billion active crypto wallets, marking a pace of growth unlike anything seen before and the fastest accumulation of wealth in history. According to Lee, this outlook reflects a career's worth of research. Every chart and study points to the same conclusion. Liquidity drives everything, and crypto, led by Ethereum and Bitcoin, is positioned to be the best-performing asset class of them all.
When we first started writing about Bitcoin in 2017 and we said it would be institutionally adopted as digital gold, people ridiculed us. We lost a lot of customers actually because they thought we really lost our grounding to reality. But as you know, 8 years later, that's the narrative. Bitcoin is digital gold. Well, let's think about the next 10 to 15 years. Wall Street's going to build a market for digital assets. Now, for reasons I won't cover here, it's going to be on Ethereum because that's really where everyone is building this future. But the thing I want to highlight today is that Wall Street is going to build a market for digital assets onto the blockchain. So it's more than just dollars, it's everything. So think about this. There's two story arcs that are going to be the next 10 to 15 years why I think it's the biggest macro trade. The first is stablecoins, the upward one. Stablecoins, we're going to tokenize stocks. NASDAQ actually just approved that this week. We're going to tokenize credit, tokenize real estate. Maybe we'll monetize our reputations on the blockchain so we can value that. And we'll monetize intellectual property, which, as you know, is the largest component of CapEx today. So if you look at GDP data from BEA and you look at what they call private investment spending, the largest share of that is intellectual property. That is easily moved onto the blockchain.
We had this government shutdown, tariff headaches. So why should investors be more bullish on risk assets, the market overall, than they were 6 months ago?
Well, John, even at the April lows, just to be clear, our S&P year-end target was 6,600. So we were still expecting explosive recovery in markets. But we are above that level. And, we're 10 weeks before the end of the year and the S&P's at 6,800, I think it's still a base case then for people to say that in just a typical year, the S&P should gain another 4%. That would put us over 7,000 into the end of the year. And I think that that's sort of the minimum. But because we've got the Fed cutting, and they started in September, they've been on pause all year. That only happened twice in the last 50 years, which is 1998 and 2024. I actually think the S&P, given the skepticism that's been plaguing this market all year, we could do far better than 4%, maybe even 10% into year end.
Wow. Okay, so where does crypto fit in, especially when you're looking at how those currencies are moving versus what's happening with tariff concerns, global trade concerns, et cetera?
I mean, crypto had a huge deleveraging event on October 10th, and part of that was triggered by the escalating tensions with U.S. and China on tariffs and trade. And that was the biggest liquidation event in 5 years for crypto. So there is still those ripple effects, 2 weeks later that are plaguing the crypto market. But I think we're almost through that, because a measure like something called open interest for both Ethereum and Bitcoin are at record lows at a time when the technicals for both Bitcoin and Ethereum are flipping positive. So I think you're going to see a crypto rally into the end of the year. And it really does help to see JP Morgan say they're open to the idea of using crypto as collateral.
On the exchange, where you talked about the fact that cryptocurrencies tend to be early indicators of where stocks are directionally headed, as well as indicators of liquidity in the broader market. So given what we are seeing in Bitcoin, and as that relates to the S&P 500 and arguably what we're seeing in Ethereum and what that says about the Russell 2000, I want to get your thoughts.
Yeah, I mean, I think it's sending a pretty bullish signal. Part of it is it's a counterfactual statement, but crypto had the biggest liquidation event, deleveraging event in history. I mean, the number is probably multiples of what happened during FTX, and Bitcoin ends up down 3 or 4%. So I think it shows you that Bitcoin itself is proving to be a pretty good store of value, because if we had seen this happen with gold in the gold market, if there was a huge deleveraging event and gold was only down a few percentage points, we'd of course consider that a real validation. And it's also true of Ethereum, because Ethereum is seeing so much activity growth. I mean, on the L1 and the L2, because of stable coins, and it's not reflected in the price. It does take time. So to me, because like what I'd call the fundamental activity on Ethereum is really picking up, it argues for a pretty big move into end of the year as well.
Do you think we're seeing a rotation out of gold, given the fact that it just moved so quickly to record highs, into some of these cryptocurrencies?
Now, I don't follow gold as closely, but I did talk to Mark Newton, our head of technical strategy, and he does think that there was what he called a cup and handle pattern earlier this year, and then the targeted move was right around where gold is peaking now. So he does think we might be seeing a short-term peak in gold. That's kind of good news for almost everything else, because as you know, gold was sucking the oxygen out of equities and out of crypto. So a gold cooling is probably bullish for both stocks and for Bitcoin and Ethereum.
So where does this leave us? Ethereum has surpassed $4,000, navigated short-term volatility, and is now attracting institutional attention reminiscent of Bitcoin's rise to the mainstream. Analysts increasingly compare this to Ethereum's 2017 Bitcoin moment, where years of groundwork finally intersect with global recognition and capital inflows. But this cycle is different. Ethereum isn't just a digital currency, it's the infrastructure powering DeFi, stablecoins, and entire ecosystems of applications that regulators and institutions are beginning to take seriously. This combination of utility and adoption is why many see $5,000 and beyond not merely as a target, but as an inevitable milestone. Over the past year, Ethereum has quietly outperformed most major crypto assets, and top analysts like Tom Lee emphasize that its real growth story is still ahead. With Wall Street leaning in, developers innovating faster than ever, and adoption spreading across industries, Ethereum is positioned to become a defining force as we move into 2026. Short-term swings may grab headlines, but the long-term trajectory is clear. Ethereum is evolving from a promising blockchain into a cornerstone of digital finance and technology. If history is any guide, the breakout we're seeing now could just be the opening chapter of Ethereum's biggest run yet. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.